Hi everyone, it's Barb here with the Realty Group, and I'm here to talk to you today about the most frequent question I get asked from buyers and sometimes sellers. What's the difference between FHA and conventional loans? And do I need 20% down to buy a home? Let's start with that first question. The answer is no. You do not need 20% down to buy a home. Thank goodness, right? In Southern California, our property values are pretty high. So no, you do not need 20% down to buy a home. In fact, with an FHA loan, you can buy a home with as low as 3.5% down. So that's the first answer. What is the minimum I can do to buy a home? The minimum down payment you need is 3.5% of the sales price, depending on your qualifications. Now, back to FHA and a few myths. It is not a government loan. It is insured by the Federal Housing Administration. Second myth, it is not just for first-time homebuyers. Anyone can use an FHA loan as long as you qualify. Second thing, FICO score, right? What's my FICO score? Do I qualify? The good news is on an FHA loan, you can have a little bit less than perfect credit with some blemishes and a lower FICO score. Conventional is going to require you to have a little bit better credit. Debt to income ratios, very hard to explain. You need a great lender to explain that to you, but conventional has tighter guidelines when it comes to debt to income ratios than FHA does. Now, where are the big differences in FHA versus conventional? Conventional, you can use for vacation homes, second homes, things that you're not going to live in, as well as your personal residence. FHA, you have to live in the residence. It has to be used as your primary residence. Now, can you buy investment properties with FHA loans? Absolutely. You just have to live in one of the units. The other big difference between FHA and conventional is mortgage insurance. Mortgage insurance is going to be required regardless of which loan you get if you put down less than 20%. But FHA mortgage insurance is unfortunately going to cost you a little bit more and stays on for the life of the loan unless you refinance or sell that property. Conventional mortgage insurance, you will still have it, but it's going to be a little bit different rate. It's going to be more flexible in how you can take care of it. And when your home does achieve a certain value, you can work with the bank to get that mortgage insurance removed. At the end of the day, you need to consult a great lender to know which loan is the best for you. You cannot go online and use mortgage calculators to determine what you're going to qualify for. You cannot go online to determine which loan is best for you. You need a trusted professional. We can refer you to one if you need one. But ultimately, at the end of the day, what I want you to know is that there's many options for buyers, FHA or conventional. If you have any other questions, we've got some links below with great ways to contact us, and we'd love to be of service to you in the future.